Let's find out what to expect and what's been playing out in the Nairobi Stock Exchange. We have Jesse Ludenyo now, and he's the Chief Investment Officer with Gagen Bank, Addis Ababa, joining me via Zoom. Great to have you on the show.
Thank you for having me, Ladi. How are you?
I'm doing great. So, looking at most of the stock markets, indexes, they're mostly all flying high, at this time. And it seems the Nairobi Stock Exchange is not left out of this party. Tell me what's it been like, the first half of 2025 on the exchange. What investors looking at? What are the best performing stocks so far?
Well, Ladi, I think you got it right off from the beginning. It's a rather quintessential period in the market, particularly in East Africa and the Nairobi Stock Exchange. Just right off the statistics that we're getting from the academic front, we realize that for the first time in quite a long period of time, I'd say for the last 10 years, we're seeing very low correlation between earnings growth and share price performance across sub-Saharan African companies, and particularly East Africa. Which is raising the question whether brokers and investors are actually, doing analysis, or whether the information is actually flowing without any asymmetry from the companies to the investors. So it's a rather intriguing point of time in the markets. And like you said, the markets was 0.54% down as of yesterday on the all share index, 0.73% down on the 20-share index. But largely, when you look at volumes traded, they're largely up. We have seen companies rising in share price in the first half of the year, oblivious of their financial performance. Top of the mark that we could probably take in note of has been the rally across the financial sector. When you look at it on a monthly perspective from August and July, we're seeing that rally across from the financial sector largely. This has been closely followed by the insurance sector and the manufacturing and allied sector, Ladi.
Right, and looking at what's playing out with the currency market and the economy in Kenya, are you seeing a correlation between what we're seeing with the stock market, so far?
Looking at the general macroeconomic factors, I think the cutting of interest rates by the Central Bank of Kenya has been rather key in trying to stimulate reallocation of portfolios towards the equity market. And that could possibly explain the reasons why we're seeing a general rise in prices, even though this is not actually backed up by fundamental analysis of the company. So when you look at the index doing all-time highs of 178, the all-share index, which is rather unique, we could largely explain that to the reduction of rates on the fixed income market. And another unique factor has been the fact that there's been a lot of portfolio reallocation, not just among the local fund managers, but also cutting across foreign fund managers. So what we have seen is that due to the portfolio reallocation, a lot of that has seen general rises month-on-month basis, and also half year on half year basis. So foreign buys have largely taken the win in the month of August compared to July. In the first half of the year, we also saw a bit of sell-offs, but generally the foreign buys took over the win compared to the net sellers, and that explains that rally in the indexes.
All right, fantastic. Thank you so much for helping us paint a picture of what's playing out in the Nairobi Stock Exchange there. Thank you. That was Jesse Ludenyo, Chief Investment Officer with Gagen Bank, Addis Ababa. Thank you for coming on today.